From our world headquarters in New York, good morning, everyone. Ken Prewitt and Tom Keene. We say good morning to Betty Lou and everyone worldwide on Bloomberg Television. We continue with Mohamed El-Erian of Pacific Investment Management Company. And I want to show this chart, Betty Lou. This is median duration. Bring this in here, camera guys, and you can see it's a 7 standard deviation move going back 50 years on that length of unemployment. For those of you on radio, it's a spike up. It looks like a medical ward chart here, something you'd see on one of the TV medical shows. Dr. El-Erian, in your op-ed today, The Real Tragedy of Persistent Unemployment, you suggest a policy response. What do you need to see right now from the Obama administration?
We need a multi-year approach that is comprehensive with respect to both the demand side and the supply side. And in the last hour, you mentioned Michael Spence, the Nobel Prize winner's op-ed in the FT, ironically speaks to exactly the same thing.
Yes.
That you need a medium-term strategy that recognizes that it's not just about the lack of global aggregate demand. It is also that the U.S. and other industrial countries have to adjust to some major global and national realignments. And if we don't do that, Ken, the charts that you showed are going to translate pretty quickly into an erosion of human skills, which means less productivity growth, more pressure on budgets that are already stretched,
right,
and more pressure on social safety nets that are already inadequate. So this issue has gone from being just important to being both important and urgent.
And really front and center, Ken, I know you want to get a question in here. Time for a shameless plug. Let's go to Bloomberg Television. I'm holding this up, radio people. Bloomberg Business Week, 2 issues ago, an Andy Grove article, the giant of Silicon Valley, that Professor Spence cites today in his FT approach, this idea of how are we going to create jobs. On El-Erian and Spence both addressing it on this Friday.
Well, it's just a case here, Mohamed, whether you're either a Keynesian or you're not. Right?
See, I think that's too narrow, Ken. I think Keynes would have looked at this and said, demand management works on a cyclical basis, but if you have structural issues, you need to address that too. And he's written a lot about that. And I go back to something that I know you're keen on and you're going to be talking about tonight, which is that the private sector is starting to self-insure. The private sector understands that there are structural issues, so it's starting to self-insure, which means companies are holding very large cash balances, which they're not spending. Households are starting to increase their cash balances, and what you're seeing is society is reacting to the lack of a long-term growth vision by increasingly self-insuring.
Well, you talk here, Mohamed, this very important idea of the distinction the American public makes between corporate success and the labor economy really not participating. How do we get the labor economy back into participation with that corporate success?
Yeah, I mean, it's ironic because companies have no choice but to adjust. And they adjust by getting their house in order quickly, which has meant resizing their business. And that's why profits have remained relatively high and cash balances are high. For the outside world, and for governments in particular, the question is, hey, wait a minute, I'm putting all this stimulus in the economy. Why aren't companies reacting? Why aren't they hiring more? Why aren't they investing more? And the reason why is because they don't see final demand. Companies are not convinced that they're going to be bridging to final demand. So they do what all of us do, which is they remain cautious. They remain on the sideline. And unless you can give a vision to business leaders, to individuals, that we are on a growth path, then people are going to hold back. They're going to increase their self-insurance.